first thing I want to talk about is step by step how to use the ARMR Investing Way to commit capital. So the first thing we're going to talk about is the risk monitor and the ARMR SPXL algo. Those are two separate things. So step one, we have algorithms written for 10 indexes that show us the flow of capital from institutions. We call that the risk monitor. The 10 indexes range from Bitcoin to treasury bonds, from small caps to the S&P 500. Okay? We have momentum in there. We have innovative growth in there. So we've got the whole spectrum. The philosophy behind this risk monitor is that when institutions are putting money to work, you'll see all of these indexes moving in the same direction. Only institutions are big enough to make that happen. And these are pivotal moments in the investing cycle for you and I as individuals. When institutions start putting capital to work, they don't do that in one day. They do that over a series of weeks and months. They're looking out further. They're running billions of dollars. So if they're going to begin making a commitment, which starts that wonderful uptrend you and I love to ride, they have to start that commitment and they have to look out 3-6 months or more and say, yeah, we want to commit this money because of what we see happening. They're making that investment decision based on information that they have that we may not have. ARMR Investing rules of the road. Information makes money. Institutions make markets. So if we see when they're moving, we can step in and benefit from the information they've gathered. Okay? So the risk monitor is our guide for all of the investing we do. Step one, risk monitor red, that equals max cash. Step two, our most sensitive algo designed just to trade the S&P, which we call ARMR SPXL, because we trade triple the S&P with that algorithm. It's an algorithm designed to maximize performance in a short window of time. Short window of time, okay? So that algo is more sensitive than the risk monitor, which has to follow 10 algos. This is just one. We break out the most important one, which is the S&P, where we have the highest probability of success making money when we get an entry point. Somewhere north of 80%. 90% in a bull market, maybe a little less than that, 70% in a bear market. So 80%. It's our most successful algo. Back in October of 2022, I shared with you the idea of taking this one algo, calibrating it for very short windows, short time frames, and building a track record together. I could show you the back-tested track record. That was great. But until you actually see it work, back-test, that's about half the battle. The other half is actually committing capital, actually following it, actually doing it. So that's what this chart is right here. It's been about 31 months since we've been following this together. The return's 145%, only trading the S&P. So if you started in October of 2022, you just traded 21 times. This is the 21st time just ended, 21 times. A $100,000 portfolio be worth $245,000 and change, and that does not include the interest we collect while waiting in between trades. That's just trading profits. Okay? So going back to our step-by-step process of using the ARMR Investing Way to commit capital strategy. Step one, risk monitor red, max cash. Step two, this strategy gives us an entry point and we commit index capital in the S&P. You can use double the S&P. You can use triple the S&P. You could just use the S&P. It's up to you as the risk manager. What's your risk tolerance? Figure out your position size. Take exposure to the S&P. That's step 2. Step 3, the risk monitor joins the S&P algo. So now ARMR SPXL has us long the market. It starts to go up and the other indexes join. And now we have risk monitor green. When risk monitor goes green, we increase our index exposure to whatever we determine, you determine, risk tolerance goals, whatever we want to have max in indexes. Risk monitor goes green, we max out. That can be increasing the size of your original S&P position. Maybe you put a third on when the ARMR SPXL strategy goes green, and then you triple it, whatever. It could mean putting on other indexes, NASDAQ 100, small cap, Dow, whatever works for you. The momentum index this time, I'm long. That's step 3. Okay. Then step 4, we have 5 days to put capital to work in ARMR Innovative Growth and ARMR Turnaround Dividend portfolios. So we begin filling out the portfolio with individual stocks. You're the risk manager. You know what your goals are. It could be all innovative growth stocks. It could be all turnarounds and dividends, which are more conservative, whatever. But there's a 5-day window to put that money to work. Once we get past 5 days, window closes. Step number 5, we now shift to manage risk mode and enjoy the ride. And that's where we are right now today. Last week was that 5-day window. Friday of last week, that window closed. So when we're in manage risk, enjoy the ride mode, there's two directions you can go as the risk manager and the portfolio manager. If you're conservative, you're done putting money to work. You're managing stops and targets. Something hits a target, you book a profit, you trade around a core. Something hits a stop, you raise cash, and you begin building up your cash exposure. So theoretically, you're 100% long by the end of day 5. And as you go forward, stops are going to get hit. Targets hopefully will get hit. And you start raising cash in the portfolio. So you're 100% long. Now you might be 95. Maybe you're 90% long. Maybe a couple stops get hit and you're 80% long. That can sit in treasury bills and collect 4% until the cycle starts all over again. Or if you're more aggressive, you recycle that cash into new ideas that pop up. So if we're at the beginning of a major bull market cycle, obviously you want to recycle that cash. So we keep doing our research. We work on our whiteboard. I'll go over a couple names at the top of my list of ARMR power play investments I want to have in the portfolio. So things that have gotten stopped out, I'm going to put that cash back to work because that's how I like to run money. I'm more aggressive. But that's the cycle, the ARMR Investing Way cycle. So we're at risk management mode, enjoy the ride mode. Everybody have a wonderful trading session. Remember, at the end of the day, think for yourself and be the smart money.